How to qualify for a commercial line of credit of up to $200,000. Hello everyone, and welcome back to another episode at Novarise Invest, your channel for financial education. So today's episode, it's going to be more about me sharing my experience applying for a business line of credit. So recently we were approached by our banker, and she was going through our books and our bank accounts, and she suggested that we are actually good candidates to proceed and apply for a business loan. And Anthony and I actually looked at each other and we were wondering, well, I don't think that's necessary because so far we're doing pretty good and we rather save our energy to continue to apply for mortgages down the road so that way we can continue to buy more real estate. However, our banker suggested that the best time to apply for a business loan is when you don't need it. So that means that if your books are looking healthy, and by books I mean your company accounting books are looking healthy, and you're in a position where you feel relatively comfortable, that now is the best time to secure a loan, lock up certain rates, and just park that loan on the side, because you don't want to wait until you're needing something in order to go and finally go and get it. It's kind of like insurance, right? Like you always want to get insurance before you need it. You don't want to wait until that moment that you're in the middle of an accident and wish that you had car insurance, for example. So we went ahead and took upon her suggestion and actually learned a lot from that experience. And that is why I wanted to create this episode, so I can share with you all of the business owners out there who are contemplating or are looking to get a business loan and are wondering about the steps, what the experience should be like, and the necessary documents that you need to be gathering. So we're going to talk about all of that today. So let's just get started. Before we start, let me remind you to subscribe to this channel and hit the notifications button. All right, so before we move on to the requisites, I want to highlight a couple of things that are very, very important to keep in mind. So like my banker said, the best moment, okay, I want to remind this to everybody, the best moment to apply for a business loan is when you don't need one. All right, so that's point one. And then two, you have to make sure that your business have enough liquidity. Okay, liquidity is very important. So what does liquidity translate to? Cash. And that you also have enough assets, which we'll go over that in a little bit. And third point that I wanted to highlight here, there are actually two types of commercial lines of credit. So one is, I'm going to call it private, meaning loans that are issued directly from the banks or the lenders. So you can call it Chase or Bank of America's or like the Capital Ones of the world. I'm just throwing names out there. Whatever institution that you're banking in, if you're applying for a loan and the money's coming directly from that lending institution, that's what I consider a private loan. And the other one is the ones that are coming from the SBA. Those that are actually backed by the Small Business Administration, right? So for today's episode, we're going to scratch off the SBA. I'm not going to talk about that. We were, in fact, offered the option to go for an SBA loan, but we decided to not do that route. One, because we already applied for a couple of SBA loans in the past. So we already know what the experience is like, but we've never gone through a private loan application. And I was actually very interested in learning about that experience so that one, I get to learn something new. And two, I get to create an episode about it so I can share my experience with you and help more business owners out there. So we're not going to focus on the SBA. We're going to focus on the experience of getting a private loan. Okay. Now, let's get started with what is it that is required. So the requirements for a business loan, the lender request 2 years of personal tax return. Okay. Now you might be wondering, well, this is a commercial loan, so why do I have to give them a personal tax return? Well, a business doesn't do anything on its own. They need a guarantor. In this case, you as the business owner, you are the guarantor. So in our case, Anthony and I provided 2 years worth of our tax return because we co-own the business. We co-own Novarise. Then after that, they also requested 2 years worth of business taxes. So Novarise in itself also reports taxes. So they were very strict about the 2 years. So that was on the private loan side. Okay, so the lender that we're working with directly, call it Chase, BOA, whatever your lender is, right? But slightly, just to talk about the SBA just for a sec, if you were applying for the SBA loan, they are a little bit more flexible in that end, meaning the SBA will not necessarily require you to have 2 years of business taxes. But like I said, we weren't in a rush. We just were like, whatever, we're just going to wait until we get our full 2 years of business taxes so we can actually go through the experience of what it's like applying for a private loan. So if you're going this route, make sure you have your 2 years. If you're thinking about going through the SBA, then the SBA might be flexible. Remember, things could change at any time. As of today, April 21st, 2022, this is the time that we're recording this episode. The rules are that for a private loan, you need 2 years of business taxes, but for the SBA, that are a little bit more flexible. Things could always change down the road. Well, it's important for you to do enough research and get a baseline of what's required. It is always good practice for you to reach out to your lender and make sure that the requirements are still the same, or check if some of them has changed, okay? Now, back to the list of requirements. So we have 2 years worth of personal taxes, 2 years worth of business taxes. The next document that they will require are copies of your most recent balance sheet and your profit and loss, which is also called your net income statement. Okay, so what is a balance sheet or what is a profit loss? For those who are relatively new, probably you've never heard about it. Probably you do have it, but you don't refer to that document as a balance sheet or a profit loss document. So a balance sheet is basically a document where you show how many assets you have and how many liabilities you have in comparison to those assets. So your balance sheet is a document that more or less is going to look like this, right? So on one side, you're going to see a list called assets. And on the other side, you're going to see a side that's called liabilities and equity or something like that, right? So what makes up your asset? Very simple. Cash that you have on hand, whether it is on your business checking account or your business savings account. It could be any physical asset. And by physical asset, I could be referring to furniture, if you have an office, or computers, if you do have office. It could be any vehicle, like a company vehicle and stuff like that. And anything that's physical that could go in your balance sheet that makes up everything that you have, everything that has value, right? It could also include loans issued by your company, because we've discussed this in a few episodes. Sometimes business owners, they move money from one business to another, and then they create loans in between each other. So whatever loan that you have issued out there, you expect to receive those back. So you get loan 1 plus interest, because you have to charge interest. The IRS doesn't like to see you moving money around and not getting interest off of it, even though you're charging yourself, but you got to make sure there's interest involved in it. And then there's loan 2 plus interest, yada, yada. So they view this as accounts receivable, meaning even though it's money that you lend out, the expectation is that you will eventually recuperate that money plus interest, which will be a gain for the company. And all of this is what makes up the asset side. Now, on the liability side is debt and whatever equity you have. So what could be a potential liability for your business? So we have credit cards, right? We also have loans. It could be any loan that you took out for your furniture, or any loans that you took out to buy computers, or why not, maybe even a car loan for your vehicle. So all of that goes here. But the goal with this side is to make sure that your equity is actually higher than what you have in the liability. So overall, when you have a balance sheet, whatever's on the left side has to match whatever's on the right side. So if you have, let's say, $500,000 in asset, this side over here has to sum up $500,000 as well. But you want the majority of it to be done on the equity side, usually as retained earnings, okay? So what is a retained earnings? It's basically money that you have made throughout the years in your company, but you chose not to take it out from the company, meaning you chose to leave it in the company so that way you can generate liquidity, you can have cash, and then use that cash and reinvest it back into the company. Lenders don't want to see business owners taking money out of their company and then just spending it on their own. They want to see that you're responsible managing your money, that you keep your money in-house so that way you can use it and not only invest it back into the company, but also they want to see that you can use that money and pay them back the debt that you owe them. So overall, if you have sufficient assets and if you have a good number under retained earnings, you already got a good chunk of the equation very well taken care of. So that's on the balance sheet. Now, on the profit and loss side. But before we do that, if you're enjoying this episode, do not forget to hit the like button right here so you can help this episode rank and help others like you looking for information of this kind. Basically, a profit and loss is a document that they check out to see how much liquid money you have available. So how much cash do you really generate after paying all of your expenses? So a profit and loss statement will look like this. So you'll have a section that is income. And then under income, you'll have revenue and then whatever amount there is. And then you have other income because you probably could be making money from interest, right? So other revenue. Then underneath that, you will see a section for expenses. So expenses could be salaries, right, that you paid out to yourself or to your employees. You can also have a list of utilities because we all have electricity, gas, or internet to pay. You can also have marketing fees because, you want to market your business. You can have office supply and yada, 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 whatever else you need. And then when you minus your expenses from your income, you wind up with a number right here at the bottom, and that's called the net income. So the higher this number is, the better the chances that you will get approved for a higher amount or just simply getting approved. In our case, we got approved $200,000. So we're pretty satisfied with that number because in my research, from what I found, usually if you are a relatively new business, less than 5 years, chances are the amount that you get approved is usually on the lower end. It's usually around $50,000. So whatever it is that we were doing, they must have really liked what we saw. They must have liked the money that was part under our net income, and they must have liked whatever we were having in our balance sheet and our retained earnings. So the company looked healthy in their eyes, and that had a big, big influence on the amount that we spent. Now, again, did we need the money? No, we didn't need the money. But given everything that's going on with the war in Ukraine and Russia, inflation, and how unstable everything seems to be, it didn't really hurt to have this available for us. In the event that something would have changed, we would want to be able to tap into these funds and be able to reinvest it back into our company, reinvest it back into our team. So that's one section right here. Next, you also need to fill up an application, right? Because, it's not new. You have to fill up an application. In our case, we needed to fill up 2 forms. Depending on the lender that you're working with, the number of applications may change. You might need to fill up just only 1 form, or sometimes you might need to fill up more than 3. It will all depend on your lender. And then after that, the lender is going to look into your credit. So in this case, they look into your personal credit, and they also look into your business credit. Now, I know some of you might be thinking, why is it a personal credit that they need to look into if this is a business loan? Again, you are the guarantor of the business. And so they need to make sure that you as a business owner also have good discipline managing your own personal money before you can even move on to the business side. And so on the business side, I actually asked them, they actually looked into the Dun & Bradstreet. So for those who don't know about the Dun & Bradstreet, here's an episode on the side that you can definitely check out after you're done with this one, where you can learn a little bit more about how you can create a profile in the Dun & Bradstreet and create your own business credit. But since you're here, I can quickly give you an overview of what the website looks like, so that way you know what to expect. And it's this one right here. So we have the Dun & Bradstreet right here. So this is the logo that you see here on the left side. And then once you're in the website, you're going to come straight here where it says DUNS number. And then you're going to go over here and select get a DUNS number for those businesses who are brand new and are hearing about the DUNS for the first time. So you come here, and in conjunction with the other episode that I just recommended, you should be able to generate a DUNS number and be able to build your business credit for when you're ready to apply for a commercial line of credit. Okay, it turns out I had a different outro for the video, but then I realized I forgot to share something else when I was recording the episode. So here you go. And so once you submit the paperwork to your banker, and I'm looking down because I don't want to trip on the street. Once you submit your paperwork straight to the banker, the process will take approximately 1 week or so for them to send it to underwriting, go over all your documentations, and if there is anything that they will need from you, they will follow up with you and request it. In our case, they didn't request anything else, so the process was pretty straightforward. It only took a week. And once the loan is approved, they're going to ask you to go back to the bank so you can sign the paperwork. And literally after you send your last signature upon loan approval, you will expect to see the loan that you got approved, the total amount, deposited into your business bank account, and it will appear on a section that they will label it your line of credit or something like that. And it's ready to go. You can choose to use it by just simply taking money out and then transferring it over to your business checking account. And everything is set up in auto mode, so that way every month you will pay back the loan, and you don't have to use all of it. Whatever amount that you get approved for, you don't have to use everything that they approve, but you can choose to do so if you want to. So in our case, it was $200,000, and we chose to move $50,000 out of the loan, mainly because our banker recommended it, that we use it, because just like everything, if you don't use it, the bank is going to take it away from you. So we didn't want to chance that. So we moved $50,000 out, and that's just sitting in our bank account waiting to be used. So hopefully that was helpful, and check this video on the side or on this side. I don't know where it is. So that way it can complement everything you just learned today. I'll see you guys soon. Take care. Bye-bye.